How do you claim no tax on overtime? To claim the no tax on overtime benefit, you must first verify that you meet the eligibility criteria for qualified overtime compensation. This federal tax deduction is specifically designed for non-exempt employees covered by the Fair Labor Standards Act who work more than 40 hours in a single work week. The deduction applies only to the premium portion of your pay, typically the half in time and a half, meaning your regular base rate remains taxable while the extra incentive pay is deductible. For example, if you earn $30 per hour for overtime and your regular rate is $20, only the $10 premium is eligible for the deduction. It is important to note that this benefit is temporary, currently covering tax years 2025 through 2028. Once eligibility is established, you must adhere to the income thresholds and filing requirements mandated by the IRS. For the current 2026 tax season, the deduction begins to phase out if your modified adjusted gross income exceeds $150,000 for single filers or $300,000 for married couples filing jointly. There is also a strict cap on the total amount you can deduct, which is limited to $12,500 for individuals and $25,000 for joint filers. One critical procedural rule is that married taxpayers must file a joint return to claim the deduction. Filing separately will disqualify you from the benefit. Furthermore, you must have a valid Social Security number to be eligible for the claim on your federal return. The actual process of claiming the deduction requires specific documentation from your employer, which has changed slightly for the 2026 tax year compared to last year. Employers are now directed to report your total qualified overtime compensation in Box 12 of your W-2 using the new code TT. If you are self-employed or your employer has not updated their systems, you may find this information listed in Box 14 or on a separate written statement provided by your payroll department. If your employer does not provide the specific premium amount, you generally calculate it by taking your total overtime pay and dividing by 3 for time and a half scenarios. Always cross-reference your year-end pay stubs to ensure the reported qualified overtime compensation accurately reflects only the premium portion of your Fair Labor Standards Act mandated overtime. To finalize the claim on your federal tax return, you must complete Schedule 1A, Additional Deductions, and attach it to your Form 1040. You will list your total qualified overtime in Part 3 of Schedule 1A and follow the worksheet instructions to determine if any phase-outs apply based on your income. The final calculated deduction amount is then transferred to line 13B of Form 1040, where it reduces your total taxable income. Fortunately, this is an above-the-line style deduction, meaning you can benefit from it regardless of whether you choose to itemize or take the standard deduction. Many popular tax software programs have now integrated these forms to guide you through the calculation automatically. Finally, it is essential to manage your expectations regarding what this no tax status actually covers. While the deduction can significantly reduce your federal income tax liability, it does not exempt your overtime pay from federal insurance contribution taxes, which include Social Security and Medicare. These payroll taxes will still be withheld from your paycheck as usual, and your employer is still required to pay their matching share. Additionally, the One Big Beautiful Bill Act is a federal law and does not automatically apply to state or local income taxes unless your specific state has chosen to conform to the new federal rules. Because this is a relatively new and complex provision, keeping meticulous records of your overtime hours and pay rates is the best way to ensure you maximize your refund. For more informative videos on taxes, finances, and investments, we welcome you to subscribe to our channel. Thank you.